Well, it doesn't give me any great joy to be right about this. I'm not going to be tap dancing on any grays, but let's go ahead and take a look at what we do know and what we can speculate about with regard to this morning's market action. So right now, markets are recovering a bit. I don't believe that this will be the last down leg of this market blow-off. Of course, I believe we're going full bear. And the reason for the recovery this morning is probably because, we'll talk about this in a minute, that the services industry, the services part of the economy still seems to be chucking along okay. Now, it's a big section of the economy, bigger than the overall manufacturing sector, but when you take into consideration housing, transportation, et cetera, to me, we are still heading for a recession. And I think that is now what I'm hearing from everybody that last week said that we weren't. Okay, let's take a look. First of all, Tesla, let's talk about Tesla for just a second. It was down over 10% earlier this morning, but now back to only 5.5% down so far today. So there's been some bargain hunting. And I think bargain hunting in this particular market is a fool's errand unless you are a trader. If you're a day trader or you're just looking for an opportunity to jump in and jump out, that's just my opinion. I don't think, again, that this is where we're going to end up. So you could also be buying in at a good point. This is certainly a good point to buy in to Tesla or any other stocks that you might be following that are down big over the last 3 days. If it goes down more, you can cost average and buy some more even further down. So you might want to keep powder dry. None of this is investment advice. I have no idea what your situation is. And so, I'm just staying exactly where I am, not making any moves right now. However, in exactly a similar situation like this, the last panic, which was the COVID panic, I sold out and I bought back in and I did well. So, make your own decisions. This situation we're in right now, as I've been saying, had to happen. It was either going to be slowly or quickly. It could have the actual beginning of our continuation down this fast. It was not expected, but it could have happened for any number of reasons. You could have had something going on in Israel or the Ukraine, a jobs number like we had on Friday, something more arcane. In this particular case, I believe it was the ISM manufacturing numbers on Thursday rather, the jobs numbers on Friday, and then this crazy news about the Japanese carry trade unwinding. So the Japanese carry trade, I think, is the thing that has pushed it even further. But if that were the key to everything, then you wouldn't have seen this little recovery rally that we've had since the opening, where when this services information started coming out, we started to see a little recovery. But again, I don't think this is where we're going to end up. All right, so Dan Ives this morning, he's saying buy now. So just to let you know, that's what Dan Ives is thinking right now. AJ this morning, he's telling people just stay put, just stay right in there, don't do anything, just hang in there, and you'll do fine a few months from now. And I think he's 100% right. Let's also take into consideration the specifics of Tesla. Tesla is not going to trade with the rest of the market from now to the end of the year. Tesla is going to go absolutely nuts towards the end of the year. And this will be primarily because of FSD being complete, FSD being 100% able to, drive itself. These things are going to, as I've talked about all weekend, these are going to be huge impacts on the Tesla stock, but it's not just that. Remember that even if that takes longer, let's say it takes until March or it takes until June for all that to take place, and then the stock will go crazy then, we've got a whole lot of other stuff going on with Tesla that is going to impact the stock long term, and including, in fact, interest rates dropping like a rock. Okay, who else is talking this morning? Jeremy Siegel. He's saying that the Fed should cut 75 basis points right now, and they should cut another 75 in September. And he's the master. He's the guy I trust the most. He's the guy I listen to top of everybody, and the Fed should listen to him. Any cut now is very likely to cause an additional downward pressure on the market, more panic, because people will go, oh, well, there's confirmation. Now we know it is recession, but it is the right move for the Fed to take right now. Of course, we're going to look at the details in a minute. All right, here are the things that are very, very important right now. The VIX jumped from 16. Now, you know what the VIX is. You know, that's the thing that it's called the fear index. It's also called the volatility. It's actually, the real name is the volatility index. It jumped from 16. It had been right around 12 to 16 for months. Mostly 12, 11, been very, very low, extremely low, showing that people were not particularly panicked at all. They were in a very good mood. Then it jumped to 25 on Friday, and then it jumped to 60 something earlier this morning. It's around 49 last time I checked. So it went nuts, and this is historically high. This is not just a jump up. No, this has only happened 2 times before. Now, maybe it'll settle down back into 25 or 30 or something like that before the end of the day. But if it settles in this area, it's only happened 2 times before. That was in 2008 and during the COVID. So I don't want to minimize what's going on right now. This is a panic day. Make no mistake, the market is in a panic phase, but the direction is appropriate. Okay, so we're going to panic blow off, and we're going to continue down to a bear market, in my humble opinion. And I was the only, find me anybody else that's been talking about this, 5% correction and then a potential going to bear. I've been talking about it for how long? For 6, 7, 8 weeks. I don't think it'll be worse than that, though. I think it'll be a traditional bear market, and it'll probably be a bear market that has fits and starts like any other bear market. It's not going to be all straight down to 20% or 30% probably on the NASDAQ. It's not going to just go straight down. Nothing ever does. It's going to be up and down. But that's where we're going to end up, in my opinion. And then we'll start picking back up again. Now, will that have something to do with the elections? Well, the elections almost always do have an impact, but the pre-election is probably going to have more to do with it than the actual day of the election, unless there's a huge surprise, of course. Everybody that I'm reading, and there's a few exceptions, I want to say it's 80% of the punditry that has an opinion, has the same opinion I do, and that is that, and these are left-wingers, right-wing, it doesn't matter what their position is in terms of their actually belief about who should win. Their position is that a Trump victory, or the belief that there is going to be a Trump victory, is a positive for the market. This current sell-off could be partially due to the fact that there's been a swing in the betting to where Kamala is now in some betting markets ahead, and in other betting markets, she's just barely behind. So now that there's a possibility of Trump not winning, this could also be playing into this whole thing that's going on right now. All right, other things that are happening, the bond yield inversion. Now, I'll check it in a minute, but the inversion was re-inverted earlier this morning, and then it inverted again, but is very, very close to zero, very, very close to just being even. We'll check that in a second. The utilities jumped on Friday. This is a traditional flight to safety in a recessionary environment, or when the market is getting ready for a big correction like we're seeing. So then the good news for today. Okay, here we go. The seasonally adjusted S&P Global U.S. Services PMI index posted well above the 50%. No change mark again in July, dipping only slightly. Last month it was 55.3, this time 55%. Or not 55%, 55, the index number. The reading signaled a marked monthly expansion in services growth, extending the current sequence to 18 months. Output increased. Companies often link this to higher new orders. So new business rose for the 3rd consecutive month at a solid pace, albeit with a rate of expansion easing slightly from that seen in June. Service providers remain optimistic that business activity will rise over the coming year, although confidence eased to an 8-month low. Okay, so keep that one in mind. So what you're looking at is services are continuing to prop up the economy. but it is easing. Their optimism is easing. Positive projections for the coming year, allied with solid new order growth in the latest survey, encourage companies to take on additional staff. So employment increased for this and increase in new orders fed through to larger output, and so they were hiring more people. PMI surveys bring encouraging news of a welcome combination of solid economic growth and a cooler selling price inflation in July. Manufacturers are reporting reduced demand for goods. This in part reflects a further switching of spending from consumers towards services such as travel and recreation. However, healthcare and financial services are also reporting buoyant growth. So there's where the positives are. Travel continues to do okay. Recreation continues to do okay. Healthcare, financial services. The rest of the economy is basically in recession. Thanks to the relatively larger size of the service sector, the July PMI surveys are indicative of the economy continuing to grow at the start of the third quarter, comparable to the GDP rising at a solid 2.2% pace. I don't believe that for a minute. I think that it's not what we're going to see. All right, a further cooling of the selling price inflation in the service sector, meanwhile, brings encouraging news. Combined with a near stalling of price increases in the manufacturing sector, latest survey pointed to average prices charged for goods and services combined at around the 2% target. Well, now that would be wonderful. All right, then this came in from the ISM, confirming what you just heard on the services PMI. I'm sorry, that was the PMI survey. This is the ISM. In July, they got a 51.4% on theirs, 2.6 percentage higher than the June's figure of 48.8. So it's a very positive number. The reading in July marked the fifth time that the composite index has been in expansion territory in 2024, after growing 15 straight months. The latest contraction before they're talking about stuff that I don't care about. The new orders index expanded to 52.4% in July, 5.1 percentage points higher than June. So, okay, these two indexes, these two surveys, both reflecting the same thing. By the way, this is Randy Kirk. I haven't asked you to like and subscribe and notify. I don't know what's going to happen this morning. Brian White he and I will definitely record a program, but I might have to break in for more information on this economic situation with this stock market situation, or maybe I'll just do two different shows during the middle of the day. And Larry Goldberg, of course, will help us figure it out at the end of the day, and I will find some good news to talk about. And then, of course, you can always help out in the Patreon area by going down below and clicking Patreon. All right. Let me see here. Let's go ahead and take a look at what is going on in the markets. Let me go to, first of all, to the stocks. We currently have, so things have absolutely flattened out. The Dow is down 2.45 overall, 2.45% overall. That would be 946 down. It was way over 1,000 down at one point. We have the NASDAQ down 618, S&P down 159, and Tesla down $11.87. Apple is also down 11, Google down 4, Amazon down 8, Meta 17, Microsoft down 12, NVIDIA down 7.34. Now remember, that would have been $73 earlier before the 10-for-1 split. Now let's take a look at these in percentages. We have got the Dow down 2.46, the NASDAQ down 3.69. It was down as much as 6% in the pre-market. S&P down 3.04, Tesla down 5.74. It was down as much as, it was over 10%, like 10.3 in the pre-market. So pretty much the panic selling is over for the minute. Maybe we'll see more downward pressure later today. You never know. I believe that this information we just read in terms of what's happening with services has mollified the market a little bit, and now we're seeing things go just like this. It's just flat and straight across. Now, there's no additional reporting that I know of coming later today other than some earnings reports. And there's some significant earnings reports this week. So if I was going to be a guessing person, I would say that we'll see additional lower numbers later today. We will not see this creeping further up. I think we'll see it creeping further down as the day progresses, but I could be absolutely wrong on that. So it's not suggestion for you to take action, just my weird opinion about how things are going. All right, then we've got the Cathie Woods, which are also down in the 2 to 6% range. 2 to 6% range. They are all down. Now, you'd think the Cathie Woods, I mean, obviously, in a situation like this, in a panic situation, everything goes down. So it's not shocking. I mean, everything is red. There's not a green spot on my chart here. Everything is red. But the Cathie Woods should benefit from this really big downturn now in the bond market. Okay, speaking of the bond market, let's go ahead and check that out. We have got, we're going to have to get out of this. Okay, we've got the bonds. The 10-year down only 3.7 at this point. At one point it was down, I want to say it was down 10. Yeah, I know it was. I remember seeing it down 10. So that has, there's been some profit taking there as well. So down 3.5 basis points right now at 3.759. The 2-year is only down 2.6 basis point. So that inversion has widened. It's gone back to being inverted, and it's inverted by about 8 basis points, which is about where it was on Friday. So it had gone to 0 and then positive, and now has inverted back to about 8 basis points. So we'll see what happens with that today. The 2-month, believe it or not, is actually up 0.13. It is the only thing I've seen that is in green this morning. The 2-month bond is at 5.305. So if you're looking for some place to put your money for 2 months, that might be the place to do it. Okay. It's the only place you're going to get 5.3 money right now, I think. Okay, let's go ahead and look at the oil. Oil had been down earlier. Let's see what's happening. We've got oil down, not as much as it was, down 77. So the 77 cents at 72.76 for Texas, and Brent is down at 76.15, 13 rather, about a $3.50 difference. Natural gas, which had been down big time, like 3% or more now, but it's still under $2 at $1.94. So that is down 1.47%. So commodities appearing to all take a dip this morning. Gold down 40 at 2,429. So that is almost $100 down from its all-time high. Silver down 4.23% this morning. Holy mackerel, at $27.18. Copper also down 2.35. It was below $4 earlier when I looked. It's back up just barely over 4. It is, call it 4. It's really at 4. And going down a bit. So I think it will be dipping back into the 3s. We have got the dollar down 2.3 against the yen, but up 0.51 against the euro. That has been, of course, that's more evidence of this carry trade. And we'll see what happens as that progresses. And then you've got the Bitcoin just being destroyed this morning. However, it has picked back up just like everything else. It has bounced. There's been some bargain hunting taking place. So we're at 52.9, down 6,273 or 10%. It was down into the 4s, into the 49 area. So this is up a bit from where it was, back up to around 53. And there you go. That is where everything is right now. So what an interesting morning. Going back and checking, everything continues to just be nope, the Dow has now begun another downward leg. The NASDAQ, a little bit starting another downward leg. S&P, another downward leg. Tesla is still straight across. Mag 7, some are showing that downward direction. Others are continuing to show that flat across. So yeah, I think we're going to see another downward leg. Not investment advice. Okay, so yesterday, couple of amazing shows. I will put them up for you, put cards for both of those shows right up here if you have time to go check those out. And I will keep my eye on this and make a decision about whether to give a midday report on the market if I think it's valuable. There's going to be a lot of information, a lot of people speculating and making suggestions and ideas about what's going to happen next as the day progresses. I'll be watching all of that. Maybe you will too, but I'll see if I can gather together a bunch of this information, and potentially I'll do another show on it later today, or I might just wait until Larry and I can do it together. All right. So that's all I got for now. It's been great talking to you on a very odd day.